Trading is not about being right. Stay tuned, traders. We'll talk about that next. G'day traders, Stacey Burke from Stacey Burke Trading. Today talking about trading is not about being right. It's about understanding the math and understanding and identifying high probability trade setups that offer you asymmetrical risk reward opportunities. So over the weekend we exchanged emails with some traders and talked about the percentage of success on their trades. And one of the biggest questions I always ask myself is, what does this trade offer me in terms of where I see the first level of resistance? Is there some kind of geometric range expansion that can happen here? And can I identify one bar as one technical level to predefine my risk? And for me, usually that's one bar, whether it's on the end of day or on the hourly. So I already have in my headspace, I know how many pips roughly that's going to be in terms of my risk, and I need to know where the first level of maybe support and resistance, or first level where that market may encounter some resistance to the trade being, slowing down. And so inherently, it's really important that you have some kind of asymmetrical reward to the risk that you're putting on to the trade. I like 3, 4, ideally 5 to 1 on if I can enter that in on a shorter time frame and reduce my risk on that trade in terms of the initial entry, but still have that same target. Because I've talked about, in the past, blowing up accounts and not being willing to take a loss, being more focused on being right on a trade and not being able to take the loss, rather than just understanding the simple math of taking a 1-hour loss, taking small losses, and then when you're in profitable trades, having 4 or 5, maybe 10 to 1 profits on those trades. Those are the types of trade setups that I'm really focused in on. And that's come from probably the school of hard knocks, from doing everything the wrong way. And it's a real mindset shift when you understand the math that helps you get really good at losing, because you want to lose right away. And you need to understand your instruments to know the sort of behavior that's going to take place. Do they run wicks a lot? Is there a lot of volatility? I know in some of the cross rate pairs, just the less liquid pairs, perhaps there's going to be a bit more, it's not stop running, but volatility, because there's less orders in the market for the market, for those positions to chew through. So really focusing on the math. Again, if you're taking 1-hour loss, 1-hour loss, 1-hour loss, and a 5-hour profit, now you're up 2-hour. You're not down 3-hour. And so you might take 10 trades and you might be up 4-hour over those 10 trades, as opposed to being, a 1-hour profit, a 1-hour loss, or a 1.5-hour loss and a 2-hour gain, that sort of stuff. I've talked about keeping your losses as consistent as possible, and really focusing in on asymmetrical risk reward. I've talked about, reading about Paul Tudor Jones, Bill Lipschutz, looking at nothing less than 5 to 1. And I think that's a really great type of trading strategy. I didn't really understand what that meant until I started, really listening and focusing on Peter Brandt's material, classical charting patterns, the geometric patterns, where when markets break out of ranges, and I really like rectangles. That's what I look for. I've learned stuff from Al Brooks, Schaubacher, Edwards, and McGee, but Peter Brandt probably really helped tie all that together in some simple ways. Now, I don't follow exactly what Peter does, but it's allowed me to, personalize that to my trading strategy a bit more, and understand now how I can set profit targets, what I can look for bigger range expansions. And that's what it's helped me to understand the math in a practical way, in terms of applying that into my trading day to day. Not just saying, oh yeah, I want to get, 3 to 1 on my trades. But what does that actually mean in a trading application, in a technical sense? So it's really important that you understand the math. It's not about being right, but obviously you want to have a positive expectancy. And we talk about this in other videos as well. Whether it's 10 block trade samples, have some way of monitoring your overall performance. Using EdgeWonk, you get the free trial from the link on my homepage, or even just getting a notebook and keeping track of everything in 10 block samples. Again, keeping your losses constant. And then getting better at extracting the most out of your winning trades, and maybe losing less on your losing trades by maybe using smaller time frames, or in terms of timing your entries, those sorts of things. But again, the most simple thing to start off with is just focusing on asymmetrical risk reward, getting the math down, looking for trades that are going to give you more than you're risking on your trades. So it's not about being right, traders. Shift your mindset from being right to being a good risk manager and focusing on asymmetrical risk reward. And again, if you haven't done so, go to my homepage, get my 7-step daily routine for high performance traders. Get yourself into the daily habits, working on your mindset, working on the type of trader you want to become, sharpening your edge, journaling your trades, accelerating your learning, simplifying your trading strategy, getting rid of the analysis paralysis, and focusing on constant progress. So stay disciplined, keep getting better, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.